I gave up U.S. citizenship many years ago, and yet I understand and respect that the average American, even the average nomad capitalist American, is never going to do that. But I don't want you to not do it because you have the wrong facts. And today I'm going to share with you someone who I think got it entirely wrong. So we've worked with a lot of clients, many of them have been Americans. People hear that I've given up U.S. citizenship, and they'll often come and they'll tell someone on the team, hey, I'm not ready to renounce yet, but maybe one day I'll be like Andrew. I don't judge people whether you want to keep your U.S. citizenship. Maybe you love being a U.S. citizen. We help Americans move overseas and dramatically reduce their tax. On occasion, you can even reduce it to zero as an American, but you're always going to have a few more restrictions. And that's a decision that everyone should make for themselves. I don't think that most Americans renounce exclusively for tax. It's not just about the money. There's so many other factors. But I don't want you to have misconceptions. And so I found an article on CNBC.com. The title is, "Here's Why It Doesn't Make Financial Sense for Americans Living Abroad to Give Up Their U.S. Citizenship," one expert says. And I'm going to go through this with you, and I disagree with a lot of what they say. And so I don't want you to have the wrong idea. Here are the key points. Americans who move abroad still have a responsibility to file taxes with the IRS. That is correct. You have to file a tax return. Does that mean you pay full taxes? Not necessarily. You have the foreign earned income exclusion. If you are an entrepreneur, you can use foreign corporations to defer tax, potentially indefinitely. It is more difficult than it once was. You need a more complicated structure. Nomad Capitalist helps people with our network of tax experts, not just that handle U.S. tax, but handle tax wherever you're going. We help our clients put those together. So you can reduce your tax, you can use exclusions, you can use exemptions, some might even call them loopholes, to dramatically reduce it. But you're always going to file a tax return when you have a foreign corporation, when you have a bank account overseas, when you have a brokerage account. Yes, you have to report those, and I suggest you do. Other key point, while giving up American citizenship to avoid paying U.S. taxes might sound like a tempting idea, experts, actually in this case, one guy, advises against it. I don't advise for it or against it. I think that if you come to a service like ours and we guide you through a series of questions on a process that we've been perfecting for years, you'll come to your own conclusion with some guidance, kind of asking you, playing devil's advocate. I don't advise for or against it. I think you should make your own decision. What I can tell you is I've done it. It's not as scary as you might think. It's refreshing in a way, but I respect not everyone has that opinion. I don't know why experts should be telling you what you need to do. And there's so much of that. It typically doesn't make financial sense, and there's a few reasons why. That's what we're going to get into, according to an advisor that we won't mention. Americans who move abroad still have a responsibility to file taxes with the U.S., sometimes in addition to taxes paid in their place of residence. Very true. This is one thing where if you move to Canada, for example, as much as you think, hey, the U.S. and Canada are buddies, there's actually some things where their tax codes don't line up, and people really get screwed. And they end up really having a hard time. And some of the middle-class Americans who live in Canada can't even afford to renounce, really. And so that's a challenge. So if you move to a country where they have taxes, yes, you're going to file and pay taxes there. That's why my advice for many Americans is if you look for a tax-neutral country from your personal perspective, your life is going to be a lot easier. If you go to a country where they have no tax, or if it's territorial tax, or even we can get into more in a moment into like non-dom or lump sum taxes. If you can have predictable tax exposure on the side of the country that you're going to, that's going to make it easier to deal with the U.S. and you're going to have fewer conflicts. So please don't take this as tax advice because it's not. But what I tell a lot of people, Americans and otherwise, is if you have a business to incorporate, it's good to have that in a tax-neutral jurisdiction so that then your country of tax residence, where you choose to spend the most time or where you subject yourself to tax, that's the one factor that matters, and those two don't conflict. If you also happen to be an American where you have the U.S. over there asking for your money, then the same tax-neutral status for where you live personally can also help with the U.S. So yes, understand if you're an American, where you live can be an issue. And I remember looking a number of years ago at the Wall Street Journal where they said, hey, the U.S. passed some new law and people who live and pay taxes in the U.K., but they happen to be American, are getting screwed. They're getting royally screwed with like double tax because the UK and the US tax systems don't align. And so that's why moving to a high tax country as an American can be a disadvantage in some cases, even if there's a tax treaty in some cases. So the article continues. Unsurprisingly, the thought of renouncing U.S. citizenship may have crossed their minds at least once. Experts, again, one expert, advises against the move. While there may be some instances where the pain of being American arises in the tax liability, you're very rarely double taxed as an American, this expert says. Now, this can be taken both ways. When I was growing up, we would drive in the street and there'd be a sign, people would have a political sign, vote for the school levy, no new taxes. And my father would say, well, the school levy is set to go away, so you are voting in a new tax, because if you didn't vote it in, there'd be no tax. So yes, the tax is there now, and if you vote yes on the school levy will still be there. The tax isn't going up, but it is going up because the tax would have gone away otherwise if you voted no. And that's kind of the same thing that applies here. Let's say you want to move to Ireland, which has a non-domiciled tax program. That means you can have your company overseas, potentially in a tax-neutral jurisdiction, and you can remit money from your own company to yourself in Ireland. If you're an American, you'd have the foreign earned income exclusion to contend with. But if you weren't an American, basically you would pay tax in Ireland on whatever money that you chose to bring into the country to live on, or for whatever reason you wanted to. However, if you're an American, they're going to add the layer of, okay, well, you have your company in a tax-neutral jurisdiction. There's a thing called GILTI. There's numerous other rules that all come into play that make you pay some minimum amount of tax to the United States. Now, there are certain Americans that can exclude themselves from that regime, but it's not that many. The taxes that you'll pay are still much lower than what you'd pay by living in the United States. So moving overseas still makes sense. And the fact that the country that you're moving to is taxing you based on a predictable basis is good. But the U.S. is still adding a layer of tax on top of that. Is that double taxation? Well, I mean, you're not going to be saved just for the fact that the U.S. and Ireland get along. You're still going to pay what the U.S. needs you to pay. So is it double taxation that you could have avoided it if you weren't American, because the country that you're living in doesn't require you to pay as much as you're paying otherwise? And so you're not double taxed, but you are taxed more than you would pay otherwise, and your life is made more complicated by filing 2 tax returns. And so, the one benefit of being an American is that leaving the country and getting that foreign earned income exclusion is easier than exiting the system and becoming a tax non-resident of Canada or Australia or many other Western countries, in that you don't have to necessarily go and live in one place full time, as long as you're willing to dramatically limit the amount of time that you spend physically in the United States. And so for a lot of Americans, knowing that they're already a U.S. tax resident and that U.S. tax status can perhaps help them in some places, help because they're paying to not live in a country. That's why a number of Americans like my trifecta method, where they don't fall into any other country's tax trap and all they have to do is deal with the U.S. Because why would you want to put 2 tax systems together? Are you going to pay more tax than the U.S. requires? Maybe, maybe not. But you are going to pay more tax than the host country requires. The article goes on. Additionally, and by the way, for all the talk of taxes being the price that we pay to live in a civilization, well, how about we let each country determine what civilization they want? You get to judge if that country is civilized to where you want to move there, right? Do you want to move to Dublin? Do you want to move to Dubai? Do you want to move to Vanuatu, right? There's different levels of civilization in there, right? They all actually have a relatively similar amount of tax if you are a foreign entrepreneur coming in and you structure your affairs properly. So how much civilization do you want? How about we let each country determine how much tax they want to charge you for the services they provide? The article continues. Citizenship renunciation is not an easy process and can be difficult to backtrack on if you change your mind. Having been through this, having watched other people go through this, having friends who have gone through this, everything is easy and nothing is easy. The process, quite frankly, is straightforward. The actual renunciation process itself. The tax process, yes, there's stuff that has to be evaluated. We recently interviewed a gentleman who renounced way back in the 90s, back when it was a different experience. And he said, I was glad that I renounced when I had no money. And he wanted to make money after, renouncing his citizenship. In a perfect world, that's ideal because you don't really have much tax planning to do if you don't have any money. Once you start having more money, sure, the process of planning for tax will be more complicated. That said, we have tax lawyers and tax professionals we work with. You talk about the case, you figure out, what the approach is. And, you get that documented, you get it put into place. Is that easy? It's not easy in the sense of it took years to gather all that information, but the process of knowing what to do isn't easy. Now, if you're renouncing with $100 million, yeah, you waited too long. There's going to be a big exit tax. We'll see if they're going to keep that exit tax in force. If they don't, if they take the exit tax and the ability to tax unrealized capital gains actually away, I think you'll see more people renouncing because it will become easier. But for now, yeah, if you've got a lot of money with unrealized capital gains, then, I mean, the paying isn't going to be easy. It's going to be painful. But listen, why does it cost so much? Because it's worth it. So the process itself, I mean, yes, there's things that you want to be aware of. Like anything, it's worth seeking proper advice. You don't just want to walk down to the embassy and renounce and then figure it all out later. But the process of figuring that out, if you work with a network like Nomad Capitalist has, I think is straightforward enough. Can it be difficult to backtrack on if you change your mind? Yeah, I'll change the two. It will be basically impossible to backtrack on if you change your mind. People are often confused. How do I renounce my citizenship and then I have to leave the U.S.? No, you've got to leave the U.S. and then renounce your citizenship. You go to a diplomatic mission, you go to an embassy, you walk in and you raise your right hand and you tell them, I'm out. And once you do that, I mean, there's no such thing as, well, I was once an American, so can I come back? You are like anybody else. If you need a visa, you got to get a visa. If you want to get a green card, you get a green card. And okay, if you marry an American, then you can get a green card by marrying an American, hopefully. But you are just like anybody else. And quite frankly, that's perfectly fair. And that's how it is. And so I think that anyone who has the idea to renounce citizenship, like it's temporary, and then like they're just going to go and like spend a bunch of time living in the U.S. afterwards, I mean, that's not how it works. Depending on what passport you have, I know plenty of people who have renounced, who they either go as a Canadian, they just show up, or they go as a British or a Swiss person or a Korean and they get an ESTA. You could get other, visas or residence permits as well. But you should understand, if you're not a U.S. citizen, you're not a U.S. citizen, and you are treated like everybody else. What a lot of Americans don't understand is the vast majority of the world's population needs a visa to come to the United States. You can't just show up just for a visit. I remember I had some friends of mine talking to my Egyptian friend. Oh, have you ever visited the U.S.? She's like, no, I would never get a visa. They said, well, just to go to Disney World for the week. It's like, yeah, you need a visa for that. Otherwise, she's like, I think half of Egypt would be living in the United States if you could just show up. Like, that's why you need a visa. We got to keep out the bad hombres, right? We got to keep them out. So, yes, if you're going to renounce your citizenship, it's not something you can just go and flip later. I did see one or two countries where you can actually go back and undo the renunciation later if you're willing to kind of revert back, but not the U.S. So the article continues. The pain of being American. Before you move abroad, make sure what your income situation will be, whether you'll be working or whether you will depend on retirement savings. We work with a lot of entrepreneurs and investors here. They don't always know what their income is going to be. And that's why I think the predictability of course, tax-free or territorial tax where your foreign income or most of it is exempt, that's pretty predictable. Or a lump sum tax regime if you want to live in Europe, where you pay some fixed amount, 100,000 euros in Italy, for example, or a non-dom regime where you can kind of control how much money you remit into the country, remittance-based regime where you have control. The challenge is if you're an entrepreneur or an investor, you don't necessarily know how much money you're going to make this year. And so that can make it more complicated. And I think for Americans, that makes it more complicated because the U.S. is always there. But again, if Italy is willing to take a lesser amount, the U.S. might say, hey, great, we're not going to double dip on that. But once that runs out, we'll come around for the rest. And so is that really saying that you're not being double taxed? There's different ways to look at that. The U.S. and the country of residence might have an income tax treaty, it might have an estate tax treaty, or it might have a normalization agreement for Social Security. It depends on all the different rules. And so, sure, we have tax lawyers who can go through that. We had somebody once who they wanted to renounce at the last minute before they sold a business. And I think we found some way to save them like a few bucks. I mean, the ROI was still great, but it was not nearly as much if they had hired us when they first came a couple years earlier. But it involved some kind of I don't remember the whole case, but it involved some kind of normalization agreement. And if you move here, and if you claim this, and if you do that, it becomes complicated when you move to high tax countries. Obviously, if you don't have a high income, and you just have some kind of salary income, okay, fine, move to France, and yeah, you're probably not going to be double taxed. But if you're an entrepreneur or an investor who's moving overseas and reducing your tax burden is a consideration, you can do that as an American. You will lower your taxes, but you're not going to lower them as low as a non-American would. And if you're going to move to a country that has, let's say, a treaty, you're making more work for yourself because it doesn't always line up perfectly. They say to that point, some European countries such as Portugal tax retiree stream of income, so expats' tax liability under the double taxation agreement is to the foreign country where they reside and not the U.S. And the article goes on. Why American expats renounce U.S. citizenship. Oh, actually, there's a second expert. I'm sorry. There actually are two experts in this article. Americans who end up rescinding their U.S. citizenship might do so to explore different investment options or really low tax jurisdictions. Yeah, that's true. Americans are aced out of a lot of investments. We had a lot of people who were looking for crypto investments where they couldn't do it as an American. There's certain mutual funds. There's certain property funds. There's many different things where you can't invest as an American. There's certain banks and brokerages that won't take Americans or can't offer the full fleet of services. And there's just certain investments where, hey, we can't have more than a certain percentage of Americans. And so I've seen situations where, I'm sorry, Mr. American, we can't take any more of your money for our great investment because we have too many Americans. We have too many American dollars. Americans think that their money is more valued around the world, but as I've told you multiple times, the Singapore banker speaks the truth when she says, we'll take a rich Vietnamese or a rich Indonesian any day of the week over a rich American. A lot fewer strings from the people here in Asia than from the Americans. And money from an American is no better than money from someone from Vietnam. So you are cut out of some of the investment deals. And yes, you are cut out of the really low tax jurisdictions, especially if you're an employee. I had a friend once, he was an employee in the UAE, and he got the foreign earned income exclusion, but because he didn't own the business, he just paid the U.S. on the rest, even though the UAE taxed his salary at zero. Only something like 10% of his salary was actually subject to the foreign earned income exclusion that the U.S. offers people who move overseas. The rest he just paid and paid and paid for a country he didn't even go to. And so you're going to be able to lower your taxes even more in some places where the tax rates are lower if you're not an American. Now, there are, again, certain conditions where Americans can pay zero. But if those don't apply to you, or if you won't let them apply to you, then you're going to pay a bit more than a non-American. And so, obviously the argument goes that if you're making millions of dollars a year, saving, let's call it 10%, that starts to add up. Now, there's plenty of Americans who say, hey, I don't agree with the policy, but $300,000 a year is kind of a land rent to the United States to carry this passport. I can go back whenever I want. That's worth it. And so that's why it's not all about money. Sure, if I wanted to live in the United States, if I wanted to visit the United States, that would be worth something to me. And yes, I tell people not to go around and to shoot themselves in the foot just to make a point. If you want to make sure you can go back to the U.S., it's worth some price. Now, we've had people who get to a certain point. Is it worth $100 million to go to the U.S.? At that point, I start to say, yeah, they have beaches that look like California, some in other places too. Do you miss the New York subway? There's urinals everywhere. You'll find plenty of places to go. The article continues. For example, an American moves to a place with little to no taxes like Monaco or Dubai. However, they still have U.S. tax liability. Monaco is not quite the tax haven it's cut out to be if you're an entrepreneur, but okay. For those people, it's a pain. They opt for giving up citizenship to avoid paying taxes. Again, I don't think it's to avoid paying taxes. I think it's not even the unfairness. I think that the paperwork and the fear and all that kind of stuff is an issue. I think that they just say it's not worth the price of admission. It's not about not paying taxes. It's about I'm not getting my money's worth. He also goes on to say if you buy a mutual fund, then there's a different negative tax rules, particularly people who live in Europe. But then they say the U.S. financial system is a huge benefit to have, where you can invest, trade, or hold your money for almost nothing. And it's true. Zero commission brokerages don't really exist outside of the United States, but I don't know. I don't know that I'm complaining that I have to pay $1 or $2 to trade stocks sometimes. And by the way, you can have U.S. brokerage accounts, but if you're not a U.S. citizen, you want to consider the effects of that on your future estate, something that most people don't think about. So yes, most European banks charge higher fees for the same services and are constantly trying to sell you new products. Don't renounce your new citizenship because you might get a few sales emails. Don't do it. Come on. The U.S. system is more evolved, and if Americans took that view when they live abroad, they'd be a bit happier about being an American. This is my challenge, right? I'm here to strip all the jingoism, all the patriotism, all the emotion out of the process and to help people make the best decision for themselves. And when you say stuff like, you'd be proud to be an American because your bank doesn't call you as often, okay, just play the Tucker laugh. The funny part is, I have people who work for me in places like Colombia and Venezuela. What do I always tell you? The financial center for Latin America is Miami. Those Colombians and Venezuelans got U.S. visas and went to Miami and got U.S. bank accounts. So if you want that system, you can have access to that system. Again, there's things that you want to keep in mind from a future tax perspective. And yeah, Swiss banks charge a lot of fees, and they don't add that much more value, in my opinion, for the average person. Singapore banks don't charge those fees. Brokerage accounts that are online these days, I mean, they're all pretty affordable. I mean, if the difference literally is a couple bucks for trading stocks, that's really what's going to stop you from renouncing citizenship. I'm not telling you to renounce citizenship, but like, please don't do it because someone said you can't open a U.S. bank account, or you're going to get fewer sales emails, or you're going to pay $2 more to trade a stock. So altogether, the article wraps up. Renouncing your citizenship is a much bigger process than may be necessary. It's not necessarily easy. It could be a little bit expensive. And it's one of those things that it's kind of hard to undo once you've done it. They go on to talk about you might owe exit taxes. And that's something that's being debated right now, whether that's going to be continued. I would never count on the U.S. government to take the chance to not tax people. But yes, if you expatriate and you owe tax, you got to pay the tax. And so those are all things to be considered. But for me, a little less patriotism towards a country that probably doesn't do that much for you is probably the way to make more sanguine decisions than worrying about a sales call from your bank.